What if your 30s are the only decade that truly decides whether you retire wealthy or work forever? What if the difference between financial freedom and financial stress at 50 isn't luck, inheritance, or a six-figure salary, but the habits you build between 30 and 39? And here's the real question. Why do some Americans in their 30s quietly build real wealth while others making the same income stay stuck living paycheck to paycheck? If you're in your 30s or about to enter them, this might be the most important financial conversation you'll ever hear. Because in America, your 30s are not just another decade. They are the foundation decade. Let's be honest about something. Your 20s were messy. You were figuring things out, building your career, switching jobs, paying off student loans, maybe moving cities. But your 30s? This is when income becomes real. This is when promotions happen. This is when stability begins. This is when compound interest can either become your best friend or your biggest regret. In the United States, the average income peaks between late 30s and early 50s. That means your 30s are the launch pad. And here's what most people misunderstand. Wealth is not built by income alone. It's built by systems. So, how do Americans actually build real wealth in their 30s? Let's break it down step by step. First, they understand that retirement accounts are not optional. In America, the system is designed to reward investors, not savers. If you're working a W-2 job, you likely have access to a 401k. And if your employer offers a match, that match is not a bonus. It's free money. Real wealth builders in their 30s don't wait until things calm down. They contribute early. They at least capture the full employer match, and ideally, they aim for 15 to 20% of their income going toward retirement. Why? Because time is more powerful than contribution size. A 30-year-old investing $8,000 a year can outperform a 40-year-old investing $15,000 a year simply because of compounding. That's not theory, that's math. And the earlier you start, the less pressure you feel later. Second, they use tax advantages intelligently. America has one of the most investor-friendly systems in the world. Roth IRA, traditional IRA, 401k, HSA accounts. These aren't random acronyms. They are wealth-building vehicles. A Roth IRA, for example, allows your investments to grow tax-free, and withdrawals in retirement can also be tax-free. Think about that. Tax-free growth for decades. But most people in their 30s don't use it because no one explains it clearly. Wealth builders educate themselves. They don't rely on school. They don't rely on HR. They learn the system because the American financial system rewards those who understand it. Third, they control lifestyle inflation. This is the silent killer of wealth. In your 30s, your income increases, but so do your temptations. Bigger house, luxury SUV, private school, frequent travel, dining out 3 times a week. None of these are wrong, but if every raise upgrades your lifestyle and not your investments, you'll look rich but stay financially fragile. Real wealth builders do something different. When their income increases by $10,000, they upgrade their lifestyle by $3,000 and invest the remaining $7,000. That gap, repeated for 10 years, changes everything. Fourth, they avoid toxic debt. Debt is normal in America. Mortgage debt, often strategic. Student loans, common. But high-interest credit card balance, that destroys momentum. In your 30s, every dollar has opportunity cost. If you're paying 22% interest on a credit card balance, you're not building wealth, you're funding the bank. Wealth builders prioritize. Emergency fund first, then high-interest debt elimination, then consistent investing. They don't try to invest while drowning. They stabilize first. Fifth, they invest consistently, not emotionally. Markets go up. Markets go down. Recessions happen. Inflation spikes. Headlines scare people. But Americans who build real wealth in their 30s don't panic sell. They understand something powerful. The S&P 500 has recovered from every crash in modern history. They automate investments. They use index funds. They think in decades, not weeks. They don't chase hype. They build boring wealth. And boring wealth is powerful. Another important factor is career leverage. Your 30s are prime earning years. Wealth builders negotiate salaries, switch companies strategically, build valuable skills, develop side income streams. Not because they want to hustle endlessly, but because higher income, when paired with discipline, accelerates wealth dramatically. An extra $15,000 a year invested consistently in your 30s can translate into hundreds of thousands later. Income matters, but only when managed correctly. There's also something deeper happening in your 30s. Identity shifts. You stop trying to impress everyone. You start thinking long-term. Real wealth builders make decisions based on 20-year consequences, not 2-week excitement. They ask, will this car payment delay my freedom? Will this house stretch me too thin? Will this subscription stack slowly drain my investing power? That mindset shift changes everything. And here's the truth most people avoid. Your 30s are the easiest time to build wealth and the hardest time emotionally, because friends are upgrading. Social media is loud. Comparison is constant. You'll see people buying homes, boats, Teslas, luxury vacations, but what you won't see, their net worth, their debt, their stress. Real wealth is often quiet in your 30s. It looks boring. It looks disciplined. It looks patient. But by 45, it looks powerful. In America, building real wealth in your 30s is not about becoming a millionaire overnight. It's about building unstoppable momentum. Momentum in investing, momentum in career, momentum in discipline. Because once momentum starts, it compounds just like money. And if you get your 30s right, your 40s feel secure, your 50s feel optional, and retirement becomes a choice, not a fear. This is not about perfection. It's about direction, and your 30s are your direction decade. Let's make this real. Imagine two 30-year-olds living in America. Same city, same income, $95,000 a year, same education level, same starting point. But by age 40, one has a net worth of $750,000. The other has less than $40,000 saved. What happened? The difference wasn't luck. It wasn't intelligence. It was decisions repeated for 10 years. Let's call them Alex and Jordan. At 30, both get promoted. Income increases. Life feels stable. Alex decides, I'm going to build freedom. Jordan decides, I finally deserve to enjoy my money. Both are understandable. But watch what happens next. Alex increases 401k contributions to 15%, maxes out Roth IRA, builds a 6-month emergency fund, keeps the same apartment for 3 more years, drives the same paid-off car. Jordan upgrades immediately. New luxury SUV, $780 monthly payment, bigger apartment, frequent travel, dining out multiple times a week. No villain here, just priorities. By 32, markets dip. Jordan panics, stops investing, waits until things feel safer. Alex keeps investing automatically. When markets drop, Alex sees discounts. That single difference, consistency, compounds massively over time. By 35, something powerful happens. Alex's investments begin to accelerate. Compound growth becomes visible. Dividends reinvest. Employer matches stack. Meanwhile, Jordan feels squeezed. Higher expenses mean less flexibility. Every unexpected cost feels stressful. And here's the irony. Jordan makes the same income, but income without margin creates pressure. Margin creates power. Now let's zoom out. What does real wealth building between 30 and 39 actually look like in America? Here's a practical roadmap. Age 30 to 32, foundation years. Build 3 to 6 months emergency fund. Capture full employer 401k match. Eliminate high-interest debt. Start Roth IRA contributions. Learn basic investing principles. This phase isn't flashy. It's stabilizing. You're building financial breathing room. Age 33 to 35, acceleration phase. Increase investing rate to 15 to 20%. Consider low-cost index funds. Explore HSA if eligible. Negotiate salary or switch companies. Begin thinking about real estate carefully. Income typically rises here. The key? Don't let lifestyle grow faster than investments. Age 36 to 39, Momentum lock-in. This is where wealth truly compounds. Max retirement accounts if possible. Diversify investments. Avoid over-leveraging into lifestyle. Build additional income streams. Keep expenses intentional. By now, discipline turns into visible results. Net worth graphs start curving upward. Confidence increases. Stress decreases. Options expand. And here's something Americans often overlook: health insurance and healthcare costs. In your 30s, you might feel invincible, but one emergency without savings can erase years of progress. That's why real wealth builders prioritize proper insurance, HSA contributions, and preventative care. Wealth isn't just about growth, it's about protection. Let's talk about housing. In America, buying a home in your 30s is often seen as a milestone, and it can be a powerful wealth tool, but only if the numbers make sense. If your mortgage stretches you so thin that you can't invest, it slows wealth building. Smart buyers look at debt-to-income ratio, property taxes, insurance costs, maintenance reserves. Homeownership builds wealth when it fits your plan, not when it feeds your ego. Another major wealth accelerator in your 30s is skill stacking. Your 30s are peak productivity years. Invest in skills that increase income: certifications, specialized expertise, leadership roles, communication skills. An extra $20,000 annual income invested over 15 years can turn into serious capital. Income growth paired with discipline creates exponential results. Now let's address something emotional: comparison. In America, social media creates distorted financial realities. You see highlight reels, luxury kitchens, new trucks, exotic vacations, but you don't see credit card balances, financial stress, retirement insecurity. Real wealth builders detach from comparison. They focus on net worth, not net image, because image doesn't retire you. Assets do. Here's the deeper truth. Your 30s are when identity solidifies. If you see yourself as someone who invests consistently, you will. If you see yourself as someone who always upgrades lifestyle, you will. Wealth is partly mathematical, but it's also psychological. Now imagine this. You reach 40. You have $500,000 to $800,000 invested, a stable home, manageable debt, strong retirement accounts, career leverage. At that point, compounding does most of the work. You're no longer chasing security, you're building options. Optional work, optional stress, optional retirement age. That freedom starts in your 30s. But what if you're already 34, 36, or 38 and feel behind? Here's the good news. It's not about perfection. It's about starting now. Even 5 strong years in your late 30s can dramatically shift your trajectory. Increase investing rate, reduce unnecessary expenses. Learn aggressively, act consistently. Momentum doesn't care when you start. It rewards action. Let's bring this back to the central question. How do Americans build real wealth in their 30s? Not through lottery wins, not through viral crypto bets, not through shortcuts. They build it through consistency, tax advantages, investment discipline, lifestyle control, income growth, long-term thinking. Simple principles, repeated for 10 years. And here's the most powerful realization. Your 30s are not about looking rich. They're about becoming financially unshakable. Because by the time most people start worrying about retirement in their late 40s, it's already harder. Your 30s are the leverage decade, the multiplier decade, the quiet power-building decade. So ask yourself, 10 years from now, which version of you do you want to meet? The one who spent everything upgrading comfort, or the one who built freedom quietly? Because the difference between those two futures is what you choose to do this year. Your 30s are not a waiting room. They are the wealth decade. And if you use them wisely, your 40s won't feel stressful. They'll feel powerful.